Okay, so what kind of situation do we currently have on GBP CAD? Let's make a full breakdown. So starting from the monthly time frame, what do we have? We have a market that clearly it is at a very strong resistance area, very strong structure area for this market. In fact, this level was acting as very strong support here, preceding all this move to the upside, again acting as resistance here. Then the market created this fake breakout to the upside, but again, the zone acted as very strong resistance here, again resistance, and currently the market is testing the zone again. The only difference is that at the moment the market is testing the zone with an inverted head and shoulders. We have left shoulder, head, and right shoulder, and the market has aggressively rejected the right shoulder to the upside exactly as we wanted to see. Going down on the weekly, what we can see now on the weekly time frame, we can see that the market has broken weekly structure and started this nice move to the upside. Now, if you're asking yourself, how did the market actually break the weekly structure? Well, the answer to that is very simple. You can just, for a quick trick, go on the line chart and you will see that you will find a close here, which is exactly the previous resistance now turned support to this area. In fact, if you go back to the candles, you can see that the market broke the zone with this green candle, retested it twice, and started this explosion to the upside. Now, as we said also on the monthly, this is a very strong resistance area that the market has just found, which was acting as resistance here, resistance here, resistance here. So it is a strong resistance area both on the monthly and weekly time frame, and the market has been respecting it quite accurately. Going down on the daily, what we can see. Now on the daily time frame, there is one very interesting thing that we can see. We can see that in creating this last leg to the upside, the market has also created an overextended W formation. And this overextended W formation tested the resistance that we have on the monthly and weekly time frame and created this red candle. Now, before I show you how we will be approaching this situation, so a situation where on the monthly and weekly we have resistance, on the daily we have an overextended W formation, retesting the resistance that we can read also on the daily. Before I show you how we will be approaching this situation with students, let's first go and give a quick check at what we have from a COT perspective on the pound and on the CAD. Now, from a pound perspective, we can see that with the last report, institutions have clearly started to short aggressively again the pound. In fact, we can see that they closed 6.9k long positions and opened an extra 3.4k shorts, bringing net positions at minus 25k with 64k shorts and 39k longs. And if we go and see what we have from a CAD perspective, we can see that on the CAD, institutions have been clearly longing, okay, actually shifting their positioning more to the long side. In fact, net positions have increased from minus 35k to minus 12k quite constantly. And currently we have 32k longs and 44k shorts, but definitely the long exposure has increased. So can we expect the overextended W formation to give us the move to the downside? Because as you know, after an overextended W formation, we want to see the market give you a retracement. Now, let's first identify a target. Okay, now if we want to measure the target, what we have to do is take our Fibonacci on the impulse, and we will have our first target to the downside at 0.382, which in this case is more or less in the middle of nowhere, and a second target at the 50%, third target at the 0.618, which is the target that makes most sense, okay, because it is a target that is aligning the best with structure. Basically, it is the one that is aligning the best with the previous resistance here. Now turn support to this area, which is also the neckline of the W formation, the overextended W formation, and it was also a structure level in the past. So we would definitely like to see the market give us a nice deep retracement. However, as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market combined with the COT data. But the best time frame for entry is the 4-hour time frame. And currently, what do we see on the 4 hours? On the 4 hours, we see a market that is still clearly creating higher highs and higher lows, and we definitely cannot be looking for any shorts yet, because the market clearly is still pushing to the upside without any sign of weakness. And if everything will remain as it is right now, the market will easily break above this area, because on the 4 hours, we literally have zero confirmations for a short. So how we will be approaching this situation with students? As usual, we will be approaching the market from a reactive perspective and not predictive, because trading is reactive, not predictive. So what we will be doing is monitoring price action all inside of this area from a 4-hour perspective, waiting for the market to shift from a bullish to a bearish market. And if, and only if, the market on the 4 hours will shift from a bullish to a bearish market, at that point we will add GBP CAD on watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, rejection of the monthly and weekly resistance, completion of the overextended W formation on the daily, and for the market to give us a nice retracement. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.